So big bottom line beat, better fees, big improvement when it comes to credit and those provisions there, but loans are still soft. How do you characterize the environment that you're operating in right now?
Look, the economy is very strong. Credit is very strong. Consumers are flush with cash and they're spending. Loan demand just isn't there. And I think it's going to be there. I think we'll see utilization pick up as people build inventories and the economy gathers steam. But, for the time being, it's been fairly muted for a variety of reasons.
What are those reasons? And what is the outlook for when you expect that number to go positive?
Well, normally, a bunch of different reasons. One, for the very large corporates, they're flush with cash because of all the public market bond issuance and the access of liquidity in the public markets. For our private companies, it's more about, at least thus far, not building inventories and doing CapEx. On the inventory side, I think demand is so strong that literally they can't build inventory. And the combination of that and some of the supply chain disruption has just slowed down what I think we would normally see at this point in the recovery in terms of loan growth. So it's coming. We're hoping for it in the back end of the year, but thus far it's pretty muted.
Bill, I was wondering how you're thinking today about the trade that you made last year, selling BlackRock stake and buying the U.S. assets of BBVA. Clearly, it's a strategic trade that you've come on to discuss with us that you love. But I guess in an ideal world, you would have got a better price for BlackRock, given where it is today.
Well, look, I love the trade. We bought BBVA at a fixed price when banks were 40%, cheaper than they are today. So, in a perfect world, I would like to, sell BlackRock today and buy BBVA 6 months ago. But the perfect world doesn't exist, and we're set up for a phenomenal future. Everything's on track with the acquisition, and couldn't be happier.
In terms of expanding, it's so interesting seeing what's going on in the space now. It feels like there is suddenly a little bit more consolidation, maybe not a total unleashing of it. And I just wondered whether you're looking around a little bit other areas. Lots of banks have plenty of capital at the moment, and buybacks aren't as attractive as they were. And just to throw lots of you at once, what about HSBC? Another foreign bank's U.S. assets seem to be on the chopping block.
Well, as it relates to PNC, we have our hands full at the moment, at least as it relates to bank acquisitions. As an aside, we have been acquiring in the payment space, even in the mortgage servicing space recently. But it doesn't surprise me that HSBC is selling that franchise. It wouldn't surprise me to see other people come into the market. It's tough in today's world, low rates, high tech costs, no loan demand, to make returns in a subscale franchise.
Bill, you mentioned that consumers are flush with cash. Just wanted to dig in a little bit deeper on the economy because you have such a good read there. Obviously, deposits are way up. I don't think there's any question that the economy is booming right now and is going to with all the stimulus that has flooded in. But what about the staying power of this economic recovery? What do you see down the road once some of the stimulus money, the checks start to wear off?
Well, I think, look, the thought and the hope, and I think it's going to be true, is the stimulus wears off, we'll actually get, the real footing on the economy coming back as smaller business and some of the affected industries, reopen. And I think we're going to see that. We're starting to see that sort of activity. In the interim, we're seeing consumer spending, retail sales support the economy, and we're obviously seeing, manufacturing, readings at really high levels. So I think it's sustainable, and I think it'll be there for a period of time.
Shepard Smith here. Thanks for watching CNBC on YouTube.